Hi guys, OFX here. Due to a few technical issues, we've not been able to stream, but we are somewhat back now. So yeah, so yeah, this is what is happening here. Okay, so we took a trade. We took a trade today. We took this trade. There's a particular 15-minute strategy that we're trying to basically the monitor is in front. That's why I'm not like focusing like usual. The screen is here, but the PC where the live session is on is here. So the screen that I'm viewing the market on is in front of me. So that's why don't mind me looking at the front like this. Yeah. So um, all right, good. Everything in check. Now we took a trade today. Now usually how do we take trades at OFX? Usually we take trades at the low or the high of the range, right? So as usual, as per usual, we had marked out we've marked out the low, we've marked out the high, we set our price alert, waiting 50%, just waiting for price to get there. Get like waiting for price to get to either the low or the high of the range, like easy. So we're just waiting. Then I was learning one strategy. So I mean, like putting it in practice, and I would say it is quite chill. It's quite chill. There are times it works. So I decided that okay, you know what? Let's try it today. Let's try that strategy today. So it is basically 15 minutes. Now it happens only at 1 o'clock. That's 1 o'clock Nigerian time. 1 o'clock Nigerian time. I don't know what time that will be. I think what day that would be, I think it will be 9 o'clock American time. I think that would be 9 o'clock American time. I think it will be nine. I think it will probably be 9 o'clock. It's probably be 9 o'clock American time or 10 o'clock American time. But over here where I am, it is the 1 o'clock strategy. So it is 1 o'clock. New York session basically. It's New York session basically. So this is the 1 o'clock candle. Like I said, this is my time frame over here in my country. This is my time frame. So this is the 1 o'clock candle. Yeah. Now the 1 o'clock candle, you wait for the candle to close. So you mark out the CRT high and the CRT low. Let me adjust this. You mark out the CRT high and the CRT low, right? Then you wait for price to break above either the high or the low of the candle. Wait for price to break above either the high or the low. Oh, Jesus Christ. It's always doing. Oh, why is this internet always doing me dirty? Okay, welcome back, guys. I don't know, my internet just vanished on me. Yeah. So, like I was saying earlier, it's a 15-minute strategy. So at the New York session, I think it's like one on my side. It's 1 o'clock in the afternoon on my side, on my end of the world. Um, mm, session. 8 o'clock to 5 p.m. Yes, Eastern time. Nigerian time is 2 o'clock to 11 p.m. The New York calendar session of is the 8 a.m. and which is 1 o'clock to 5 p.m. in Nigeria. So that's 8 a.m. candle. The 8 a.m. candle, that is the New York session. The New York session open. Yes, that's 8 a.m. On my side, it is 1 o'clock. It is 1 p.m. It is 1 p.m. on my side of the world. It is the 1 p.m. candle. So the strategy is to wait. So by the time you can see the screen here. Sorry, I'm still trying to get used to this. If I don't understand it, I'll just switch back to my usual method, streaming thing. So usually we so now you wait for the 8 a.m. candle, that is New York session open. But for me, that's the 1 p.m. candle. That is this candle, as you can see, 1300 hours, that's 1 p.m. So that 1 p.m. yeah, I then, after the 1 p.m. closes, I mark out the range high and the range low, right? I mark out range high and range low. Then I then wait for price to break above range high or range low, right? Now, so the 1 p.m. candle closed, that's 1 p.m. on my side, the 8 a.m. candle there. But it's closed, so I marked out the high and the low. Then I waited. This is 15 minutes after. It didn't break above, it didn't close below. So the next one though, that's the 130 candle broke above, or the 8:30 candle, or the 8:30 a.m. candle. It closed above, right? So it finally closed above after all this frivolicking. It's closed above. Now, once it closes above or below, you then set your limit at the high or the low, waiting for price to come and retest, right? Waiting for price to come and retest that place. So now, this is the 15 minutes. What was I saying? You're supposed to switch to the 5 minutes actually. So after marking out range and range low on the 15 minutes, you switch back to the 5 minutes. So yes, this is what it would look like on the 5 minutes. Yeah, this is range high, range low. Now you see it's closed above it, then you wait. Then you wait for the retest. Mouse died. My back. All right. So then you wait for the retest of the high, right? In this case, since it broke above, since it's broke above, we'll be waiting for the retest of the high, right? Oof, what's happening here? Look at that. Look at that sudden dump. Don't know what's wrong with gold. I mean, look at this. Look at this. Look at this. Look at this. Look at what's there. God does whatever it wants to do, Charlie. Anyways, the break and close above the range high, right? Then we wait for a retest of the high, right? So we put our limit entry, put our limit. By the time it breaks above, you put your limit or you observe till it comes back to the range high, then you take your trade. SL at range low, basically. So as you can see, it's closed above. We waited for the retest, took our buys, 0.7. SL is supposed to be at range low, which is 0.4. But I mean, there's no harm in adjusting it. I mean, it's just like 30, 40 pips here. So 07 to 07, 3307 to 3304 is about 30 pips. There's no harm making it 40 pips. Anyhow you want to do it, but here, here we're all about maximizing risks to reward. That's what we are all about here, maximizing the risk to reward. So basically, yeah, then we took our trade, we put our SL, and we let it run. So in most cases, people use it to target 1:1. You easily see 1:1. Easy. You'd easily bag 1:1. See now, you would easily bag 1:1. Easily, if you're looking for 1:1, you would easily bag 1:1. If it plays out, if it plays out here, most times you'd easily bag 1:1. So 1:1, 1:2, you easily bag those amount of ratio, those kind of RRs, yeah. Easy. 1:1, most especially 1:1, 1:1 RR. 1:1 RR is easy to bag 1:1 RR with this strategy. So if you're a 1:1 RR trader and you can try it, yeah, you can try the 1 o'clock, yeah, the 8 a.m. That's 8 a.m. New York session, basically. The New York Open, yeah, you can try that strategy. You can try this strategy. You can try it if you're a 1:1 trader. It it works. It dishes out 1:1. That is when it breaks out and retests and goes back. That it does not, if it doesn't head like straight up for the SL, right? It dishes out, it will dish out that 1:1. It dishes out that 1:1. And some people, or there are people that then try and target 1 to 2. There are people that try and target 1 to 2. There are people that try and target 1 to 3. But of course, 1:1 is guaranteed. That is if it doesn't go and hit herself first. That's if it doesn't go and hit herself. If it starts to move, 1:1 is guaranteed. It works most of the time. It works most of the time. 1:1 is guaranteed. 1:1 RR is guaranteed. But 1 to 2, 1:2, and maybe 1:2 and above. Now, that now starts to depend on the direction of the market and like the general trend, I guess. So, but 1:1 is good. So, if you're a 1:1 trader, you set your stop loss or the amount you want to risk in a day. You know the lot size you would use. You look for your 1:1, 1:1 straight up. If you want $100, you use lot size that will make you lose 100 with the amount of pips SL. So let's say you're a trader that wants to only cap $100 per day. Let's say you are trading an account with inconsistency score. And you know inconsistency accounts now. You On all these inconsistency accounts, you have to stick to a particular amount of profits. Not exceeding it, daily. So stick to your 1:1. You risk your 100 in this kind of case. With this kind of thing, I'll use 0.25 lots. That's what I'll use here. Because it is basically 40 pips risk. 40 pips risk, right? So 40 pips risk. I want to get $100 because that's my target per day. So that kind of situation, I'll use 0.25 lots, right? 0.25, 40 pips, that's $100. So 100 for 100, I bag my 100, you get? And like that, like that. Now, you probably noticed that the TP was around here. That is because, like I pointed out earlier, we have been waiting. How we trade usually. If you watch our streams, you see how we trade usually. We wait for a sweep, right? If we're not buying low or selling high, we're not taking that trade at all. So like I said, like I mentioned earlier, this is a test. I'm testing this strategy on a stream. Yeah. I have tried it before, it has worked. I've tried it about 2, 3 times and it has worked, even though that is not how I trade. But I have tried it 2, 3 times and yes, I have gotten results from it. The sales of yesterday, was it yesterday? Yes, earlier yesterday. If you use this strategy, if you used this strategy, that the sales that happened yesterday from New York session, that was yesterday or the day before yesterday. This daily candle, this is Wednesday. Yes, that's yesterday. This sales of Wednesday. If you had used this strategy at New York session open and with this strategy, you would have milked all these sales, believe, like all these sales going for liquidity sweep, because I tried it. I tried the 15 the 15-minute strategy, the New York session 15, yes, the New York session strategy, basically, and I saw that it actually moved, yeah, and see all the amount of pips would have made just be targeting liquidity sweeps. Now, if you notice, like I was mentioning earlier before the diversion, if you notice, you will see that the TP was around here. That is because we are, like, waiting for price to either have swept the low, right? Then we wait for pattern and buy with it, high, or now how we trade, or we wait for a sweep of the high, see pattern, willingness to sell, and we follow it all the way down. But price did not. We didn't even get any pattern here. So we didn't even get a sweep. So we couldn't even take any these buys from the low because it doesn't align with how we trade. So basically we had to, just stick to how we trade and wait for a sweep, right, of either side of the range we want to trade, which is this previous daily range. So yes, that is why the TP was around up here. That's why the TP was around 1:7, because we're just waiting for price to, either sweep the high or the low, which is something it's looking like it wants to do. You get? So yeah, I just wanted to show guys show guys on the stream. Talk about the strategy. Now, like I mentioned, earlier, it would always be safer for you to, 1:1. It's always be safer for you to look for 1:1 with this strategy. It's always be safer for you to look for 1:1. But if you can see the trend direction, if you know that okay, this is how the trend is, right? This is the trend. This is the direction prices, and this is the direction price is moving in. Then you can start to extend your TP. But basically, if you don't know how the direction price is moving, then you might as well just look for your 1:1 and rest. Yeah, look for your 1:1, rest. If you want $250, you risk $250 to get $250 1-to-1, and you might do 1-to-2, or 1-to-1 is guaranteed. If when it works, same with if it's closed below this low, after it closes below the low, after it closes below CRT low, you wait for a retest, you take your sales, you target 1-to-1, then probably 1-to-2, depending on how strong of a company you are. But, well, that's that about that. That's all about that, really. It's just doing whatever it wants to do. It's just doing whatever it wants to do. What can we observe? It has dished out 1-to-1. You can see that it has dished out 1-to-1. Clean 1-to-1, clean 1:1, dished. Clean 1:1. So if I was risking $45 here, I would have gotten $45 back. Easy. So when it works, 1:1 is guaranteed. When it works, 1:1 is guaranteed. When it works, 1-to-1, 1:1 R is guaranteed. Every other thing belongs to you and the market, and how the market wants to treat you. So, like I pointed out earlier, I'm just doing this to show guys a strategy that I came across recently and I tested. And I said that it actually works. It works. And it works more beautifully when you know the direction of the trend. We are not trading against the trend. Beautiful something. So yeah, that's what we are currently testing out. We actually took the trade, even though it is not how we trade, but we actually took this trade. So just saying, we actually took this trade just to, lay emphasis on the fact that, I don't think we would come and say something on this stream that we did not try, right? Whatever we say on this stream is something we've tried. And So in case somebody watches this stream and they hit SL, they can also see that we too hit SL. Easy. One minute. I don't know if you can see it's currently red, blue. It's currently red, blue doing its thing. We are on the trade. So we took the trade. We didn't just come and yap about something we did not try. We also took the trade, even though usually we wait for a sweep of the range we want to take, we want to trade. But just came across and decided to share these guys in the chat. This is for looks attractive. If we wanted to trade this 4-hour range, we could have gotten, we have probably gotten buys off this 4-hour range, because as you can see, price swept the range low. Let's see if let me see. We have to let's try and distinguish it differently, so it will look differently. So you can see that we, oh sorry, can't see anything. Sorry, this is the wrong candle. This is the candle I'm talking about. This swept this. Let me see. Sample low. Let me see SSL. Then mark it as SSL, and then try and use it as much as possible. Then switch to the 5 minutes and see if we got any trade of the SSL. Would we have been able to trade SSL? Nope, we wouldn't have been able to trade it because price only swept it. As you could say, price only swept it. Or got a sweep. You know how we take our trades after a sweep. Sweep or the sweep. Market structure shifts, breakout structure, pull back, take trades, fair value gap or OB, or push to the opposite side of the range. Basically, but we only got one sweep, and there was no pullback. It just continued to fly. So this can still come back. Let's start for our candle. All right. You see, it didn't even get to the opposite side of the range, but it's got to 50% of the range. It's got to 50%, and at 50%, we always advise to secure partials, then set break even. So now this one then opens, and we don't know if it wants to go up here to sweep, or you understand, because I mean this has already done the sweep of this previous candle. Or I mean, to take a trade, we would have wanted a sweep of the sweep. But look at this. Weak. Look at this weak. Do we still want to sell? My Bible, we might hit herself first. We might hit herself first. And it tapped, and this has even tapped 50% of this range. Has tapped the 50% of this range. So honestly, it's just all observations at this point. It's just all observations at this point. Whatever market wants to do, whatever market wants to dish out, it is permitted. It's permitted the word. It can do whatever it wants to do. Whatever it is it chooses to do. My father does not own the market. That's something I always try to remind people about. My father does not own the market. What does my father even own? Me, I guess. Well, guys, this is what we have. We didn't get a break of structure. Can you see? We didn't even get a break of structure. So we might get stopped out. We might most probably get stopped out. We didn't get a break of structure in the sense that price swept, price pulled back, a shift in market structure because it didn't come back to this low. It didn't come back to close below this low. So we can say, okay, then if it had come and taken out this high, if price had come and somehow if price had come and somehow taken out this high, then we would have been good. If price had come and somehow taken out this high, it would have been good, but price didn't come to take out this high. So at this point, we're in the hands of the market. Just observing what the market will do. As you know how we trade here, if this is, imagine this is a fair value gap and price is seriously disrespecting it. It's a small fair value gap and price is just seriously disrespecting it. It's not even looking at it. Like price is like, who are you? What do you think you are? Look at that. Just disrespecting it. There's nothing here. There's nothing here at all. Nothing to save us, nothing to hold us, nothing to stop this boy and wanting to do what it wants to do. So it's disrespected. Boom. Nothing to stop this guy from doing whatever it chooses. If we had gotten a break of this high, like a break of, you know what a breakout is, when price goes and closes above, when price goes and then closes above the target. If we had gotten a break of that high, a break and close above that high, you know how we are, you know how we do it here. We have been rest assured, at the fact that price closed above, but yeah, price is not closed above, guys. So we are going to just have to observe and see. I mean, some choice what we do. Excuse me. All right. It's just an observation game at this point. It's just an observation game. Just observing. Gaming might as well just play Need for Speed. Where's that Need for Speed? Where's that Need for Speed? Need for Speed. Need for Speed. You can play Need for Speed while we're waiting. While we are observing, we can play Need for Speed. Or can we not? Is it improper? Beach buggy. Play beach buggy. I love the beach buggy game. I love beach buggy. So while we are waiting for gold to this thing, we can play beach buggy. I can play beach buggy. Beach buggy. I can play beach buggy. Having gold. We really are playing beach buggy and observing. You can see God does not love us. So, it's observing. Let's continue observing. After this round, check gold. After this round, we will check our gold. Sometime this round. Oh no. Oh no. I feel like I'm going to lose this round. Fifth place. Damn. Not good, not good. Oh, SL hit. SL hit. SL hit, guys. SL hits. The trade hit SL. Hit SL. The trade hit SL. So, well, this is what I wanted to show guys. Yes. So, chop. The fatal flaw was the fact that price did not close above this high. That is probably the most fatal flaw, is that price did not close above this. As price, came down here, and as price came here again, you get, there's already giving us signs of a shift in structure. So it's like beautiful if this push went and broke above here. If it had broken above here, then yeah, would have confidently taken our L. We lost how much? $7. Less over $77. But if we were trading 1:1, we would have backed down 1:1. Anyways, guys, that's it. End of this stream. Of course, we'll keep you posted when there's a setup. Our type of setup, when it is ready, we would keep guys in the chat posted. We see that the trade we took on Monday that we held till about Wednesday. Beautiful trade, yeah. Beautiful something. Beautiful something. Now we just go back to waiting for our setup. Take care of this guy. So take care of this guy too. Yes. Take care of this guy too. Is this brother? This brother. Nice enough, okay. Okay, from our screen too. Who is this brother? Are you affiliated or 50% of this brother? All right. Go away from our screen. Now, this is what we want to trade. From here or from here. One of the two. And as you can see, our price alert is set. Look at that beautiful fair value gap. So price even taps the fair value gap. Price tapped the fair value gap and pushed up with it. Or got stopped out. Tap the fair value gap. And look at that reaction. Tap the fair value gap here. It's about 9.3 and it's pushed all the way to 331. So not bad. Not bad. Tap the fair value gap. All right, guys. Let's do this again some other time. Wee. Over and out.